Dr. Gunn serves as the Executive Director of the Spatial Informatics Group, Natural Assets Laboratory, a California-based nonprofit research organization. His recent focus has been on developing the tools and science necessary to implement payments for ecosystem services programs involving forest landowners. Recent peer-reviewed published work includes research on quantifying and modeling forest carbon stock changes in late successional and old-growth forests and evaluating the greenhouse gas implications of woody biomass energy. Dr. Gunn.
Looks like we've experienced a little commercial thinning out here. And had I known I was going to be right after lunch on a beautiful sunny day, I would have brought my banjo and livened things up here a little bit. Of course, banjo on a full stomach is maybe not always a good thing either. But anyway, so I'm here today to talk a bit about some of the nuts and bolts of carbon offset project development. And previous speakers have touched on elements of this, and I'm going to try to get a bit into the weeds on some of these things as well. So my role in our nonprofit group is really to try to help landowners and resource managers understand this marketplace, also to be more efficient at doing things like measuring and monitoring and modeling the forest resource and forest carbon in a way that hopefully facilitates access to the markets. And so what I'll present here then is kind of a discussion of the different transaction costs. I'll define them and talk about them a bit. And then at the end, just present a little tool that we've developed to help foresters and resource managers kind of wrap their arms around what it all means and how you get to a point of making a decision about entering the marketplace. So as I'm sure you've gathered by now that the prospect of developing a carbon offset project can be very expensive, and there are a lot of reasons for that. There's a high bar of accountability and credibility that is required, and with that comes a high cost. But understanding these costs and the timing of these costs, I think, is critical for any kind of landowner to understand before they can make the next step to get into the market. So what I'm going to do here in the next 20 minutes is kind of break down what I see as the categories of transaction costs and get into the very kind of line item breakdown of what those costs are in terms of definition. What I'm not going to do is quote different prices for each of these line items. I think there are three speakers following me that are kind of in the midst of that beast right now and can maybe speak in real terms what the costs have been to them and their specific context, because there's certainly going to be variation depending on your starting point. For example, do you have even basic information, mapping information about your resources, or do you have very detailed CFI plots that that provide a good basis for management? So I'm going to just sort of line item those costs, and then I'll get in a little bit in terms of some of the recent revenue trends and show just some of the volume of projects that have happened over the last couple of years, and then a quick overview of the tool that I mentioned. So here's yet another kind of process outline for developing an offset project. I think Jessica and Brian maybe had a similar slide with I think the same kinds of elements here. So always an initial phase of doing your research about what program you're going to get engaged with. Are you looking at compliance opportunities or voluntary side of things, and then getting into specific elements of identifying the project that would be applicable. Are you looking at a portion of your lands or all of your lands? And then getting into the actual process of developing a project. And of course, that's where the high costs, upfront costs are. And then moving through project registration, verification, and then issuance of the credits, and finally the sale of the credits, and then the ongoing monitoring and verification that's going to be required once you get into the game. Some broad categories. Of course, you've got initial costs that everyone will incur, and I'll break those down. But then you've got periodic costs throughout the life of both the project and then the life of the credit. And then I'll outline some kind of other external costs and I guess fees and expenses that you're likely to encounter. And then I also put the idea of deductions of credits in terms of a cost. So I'll talk about some of those. So with the initial costs, of course, the project startup costs. These are the meetings that you have to talk about whether it's worthwhile going forward, to educate yourself on what it means to get engaged, and so this and even some preliminary analyses. And these may be costs that you internalize in some way, but there's still real costs associated with the project. And then maybe I guess the biggest element of cost for these projects is going to be the inventory and the analysis, the sort of the modeling that's required. And as you know, I think that the gentleman from the Menominee mentioned this morning. This CFI costs are expensive, and that's the currency we're talking about is the carbon in the woods. And so and we all know to get a high precision of estimate of that volume requires people on the ground wrapping their arms around trees with a diameter tape and measuring the heights with lasers. And a certain amount of that you can help out with some remote sensing, and then hopefully that's a direction we're moving. But in the end, you can't get away from the ground-based inventory. Some other costs, and maybe not as applicable on the tribal side with some of the BIA management plan elements, but forest certification as part of the sustainability requirements of the standards. So if you're not already certified, this might be something you need to pursue in order to meet some of those obligations. So that may be an additional cost to engaging in the carbon marketplace. And of course, the legal expenses are potentially quite high with the number of contracts that have to be evaluated, and certainly the long commitment period you're looking at. There's you want a lot of scrutiny on what it is that commitment you're making. And another potentially high external cost, then, it would be the third-party verification. So if any of you have gone through third-party forest certification, you understand kind of the system and the process and what's involved with those costs. So this is a similar type of cost, and of course many of the same actors engaged in that activity. And then additional categories, so market and registry costs, as Jessica talked about a little bit earlier. So these are opening your accounts and activating the accounts, and reporting as well. So again, some of the periodic costs that you're likely to encounter are related to the initial costs. So you have to remeasure and continue to update your timber inventory, your carbon inventory, and also probably update some of the modeling activities. So there's going to be future technical costs associated with that. And again, it might be something that you can handle internally, but if you can't, it's an external cost that you'll need to consider. Along with your periodic certification costs, again, more legal expenses, and the periodic verification, the every field visits every 6 years under ARB, for example. Again, those costs are recurring, and in theory they get reduced over time because the level of intensity maybe on the field verifications would be lower, but nevertheless there's still something that's ongoing, and you need to kind of build in to your analysis. And then there are the transaction costs associated with the actual credits, and the cost per ton of verified offset, different brokerage fees if you're going through a broker, and then potentially an insurance cost if you're buying an insurance pool instead of using credits as a buffer. So this is, as you can see, kind of repetitive here in terms of this is you're in it for the long haul here, and there are very real costs that need to be incurred to ensure essentially the credibility of that credit. So you've got to report on them, you've got to monitor them, which may be already part of the activity you do, but it's still a real cost. And then again, just kind of moving down the list here, the types of deductions. So if if the level of precision on your inventory is not where it needs to be, it doesn't necessarily exclude you from an opportunity, but it just means that you've got to take a deduction on that error. So those are there's uncertainty associated with that project, so it's a deduction that's taken off of the potential credit pool. And again, the buffer pool, this is sort of that insurance pool to account for any unintended reversals, so natural disturbance kinds of things. So generally 20% of the project credits. So on the revenue side, it's really a combination of the volume of credits that are generated in the project, but also then of the price, so the dollars per ton. And so I'll kind of hit on some of these using just a quick summary of the transactions that are out there on the registries that you can look at, and would encourage you to actually, these are transparent transactions that happen, and these reports are public, and I would encourage you to go to the ACR website or the VCS website to look at actually the project documentation and get an understanding of what's involved with some of the paperwork and the documentation, but you can also see then I guess the volume of transactions that are occurring, and I think pretty useful insight to do that. And so here, just a handful that I grabbed, and it's tough to get kind of a sense of scale on these. So I tried to break it down in terms of tons per acre, but it's not necessarily comparing apples to apples, since some of these projects may involve multiple years. But you can see the scale of the projects. So California on the compliance side, California-based forest projects with high volumes. You get kind of into the Northeast, in New Hampshire, a much smaller volume per acre on the project, and probably not surprising, at least to me, just driving around and seeing some of the Douglas fir, your young growth Douglas fir that are bigger than our 300-year-old white pine trees. So there's a lot more volume out there to work with, and of course it relates to the baseline as well. And so you can see some of these early projects are taking place on lands where maybe the starting volume is well above that baseline. And so you get this initial pulse of volume that the project starts out with. So you can see posted the Round Valley project there on the compliance side, and down on the bottom the Alaska Native Corporation project under the voluntary market. So relatively low tons per acre, but you can see these. At some point, somebody did the math on these projects and decided that at that volume relative to their costs, it was a viable project. So you can see quite the range. So Kirsten showed some of this information earlier, but you can see the difference between on the compliance market side and the voluntary market side. So globally and across all markets, the average price was about $6 a ton in 2014. And if you break that down, you're looking at about $3.50 per ton on the voluntary market versus $9.70 on the compliance market. So I'd also encourage you, as Kirsten did, to take a look at those ecosystem marketplace and forest trends reports. I think they give a good sense of what's going on, and even within the voluntary market, there's a much kind of much broader discussion of what the voluntary buyers are interested in terms of these projects and the other co-benefits that are associated with them. And so I think to get an understanding of that marketplace, the forest trends reports are pretty helpful that way. So again, it's all as a potential player in this marketplace. It's really important to understand the amount and timing of these costs, and to get your head wrapped around what the potential revenue is and how that flow might look over time. And so a few years back, we developed a tool, a spreadsheet-based tool, and I think Tim Robards is here, who helped out on that tool a few years ago. And probably every project developer in the room here has their own similar internal tool, but we've just tried to provide kind of an open source way to look at potential transactions. So it's meant to provide just this first look at opportunities and give you the ability to test different scenarios, so different price scenarios, to look at different compare side by side some of the requirements of the compliance market ARB versus some of the voluntary standards, because there's some differences in terms of the timing and the project length and the verification cycles, and some of those. So that interaction plays out with the price and the volume in a way that is sometimes hard to understand. So the tool lets you compare essentially 6 scenarios side by side. And so you can look at what your potential internal rate of return on the project might be. And so the way it works is you're walked through a series of questions about the property as a way to input some basic information about the acreage and the forest types, and then there's kind of an eligibility screen that you can look at that kind of gives you a red light or green light under the different protocols, and whether or not the project you're considering is applicable under those. So the elements, and these are all kind of tabs in a spreadsheet. So there's your description of the property that you enter the information into, and then the eligibility screen that you walk through, but the big kind of the big meat of the tool is a transaction cost worksheet. So in similar language that I've used here today to define those transaction costs, you can walk through and add input your different costs, whether it's your inventory costs, or you can exclude different costs, and a way to get those upfront costs quantified, as well as looking at your periodic costs. And those are all then tied into the kind of the program you're looking at, whether it's compliance or voluntary. And then there's another tab where you can add in some estimates of what you think your project might generate in terms of tons of carbon at different time periods. And so that's a bit challenging if you're coming into it without knowing for sure. But again, thinking back to the slide of the prior transactions, you can look at what others kind of in a similar geography and forest type have generated, and you can play with some of those numbers. And then it all rolls up into a summary pro forma analysis where you plug in different prices, and it gives you an assessment of your cash flow and your rate of return, and kind of the timing that you might start seeing a profit or net revenue from the project. So it's really designed around, I think, foresters and other natural resource professionals who have some sense of what these costs are going to be, and particularly the inventory costs and some of the monitoring costs that you might be dealing with kind of on a day-to-day basis. So you might have the most kind of current knowledge to plug into that. So and other landowners as well. Thinking of just in terms of my work with smaller landowners, or would have enough insight to run through this. So really, you just need to have some basic knowledge about your acreage and forest cover types. There are many default values in there. It might be getting a little dated right now, so you might have to sort of think about how some of those costs line up. And then, again, the most challenging part then is to have some basic understanding of what the potential is for generating tons from a project. So it's available for download. I'm assuming these slides are going to be available later on, or if you just jot down my email address there, I can send you the spreadsheet tool. So again, it's not it's meant to be a tool to kind of understand these different costs and how they interact with the timing, the length of a project, the price per ton that you might see in a marketplace. So and it's done from kind of an economic pro forma perspective. So with that, that's what I've got today, and hopefully that those that follow here will be able to be open with some of the real costs that they've been encountering, and talk about that, because I think it's important to have a kind of a reality check and real understanding on what's involved with the process.